How's it going, everybody, and welcome back to the channel. We're doing a trade recap. I think today's going to be a good one. Friday, November 10th, and I want to highlight a couple things. The one thing that I'm making sure to do is trade small size. I don't ever feel like I need to trade big size. As a trader, I know a lot of people talk about wanting to size up, big money trader, constantly worry about, adding P&L. And even though that is cool, I think there's a level to this in which it's okay. You can kind of be at an area where you're comfortable and make a good living and be happy and have freedom in your life. That's where I'm at, and I'm okay with that. I don't constantly think about how do I size up, trade bigger, add stress into my life, make more. I think I can do well with small size, small risk, waiting for good entries, and you'll see today that even on small size, you can still make good money. And I know that one thing I mentioned that I'm working on moving forward a little bit ago is precise entries. You do not have to catch tops. You do not have to catch bottoms. You can wait for the right spot, take a very precise entry, use tight risk, and have that small risk for potentially big reward. That was the trade that set up today. I ended up taking a Tesla bear flag pattern after it showed some weakness yesterday, got a pretty sick move out of it, and made $1,050 in 10 minutes. Now to go over the technicals. Daily chart on the left. So what happened the prior day? Big downside move. I know if you follow me on social media, I actually thought there was potential for this to go to the upside because prior to this down day, it actually had a decent period of consolidation, kind of right at all the moving averages. And it had an open upside gap. So I thought if we clear out these highs, maybe it could work its way into the upside gap. But this is why being open-minded is very important because nothing has to happen. So what happened the prior day? We failed to move higher. We actually broke down. So you probably think that if there's anybody swing trading, people who hold stuff overnight, they could be stuck. Possibly got a lot of stops that are getting hit. So we had that downside move back below some of the moving averages, showed some relative weakness compared to the overall market. And I know the market is extended, so if there's any sort of pullback, being that this is relatively weak, maybe that weakness could continue. So coming into the day, I was thinking, hey, I'm going to be looking for possible continuation to the downside, but I want to wait for a good spot. Nothing has to happen. So that's what I was thinking of as far as the technicals on the daily. That was the bigger picture idea. Now let's go to the right. This is an intraday 2-minute chart, and we'll break it all down. So this blue line is pre-market high, the red line is prior day low, and then the line below that is going to be pre-market low. Those are the levels that I always like to trade around. It's going to be pre-market high, pre-market low, prior day high, prior day low, prior day close, and then high day and lower day after a long period of consolidation. So what did Tesla do off the open? That first candle was red. Sold off a little bit, got back above the VWAP, the 9 EMA, but this is just chop in my opinion. There is no setup here. Waiting for the first few candles to close off the open, even waiting like 10, 15 minutes, I've noticed in this market, can do a lot of good things for your P&L because you're not jumping into stuff quick, which is where sometimes I can get in trouble. Just let things do what they got to do. Don't feel the need to have to take the first pattern. Let it play out. Even if it's 20, 30, 45 minutes, an hour into the day, they're still usually going to be pretty good setups. And that's what I did. So I had the sell off, quickly reclaim VWAP. It did get over the highs. So this would be an opening range break to the upside. I didn't really love that it got there just straight up. If there was some consolidation here, I would have considered that a better setup. But even taking it over the highs, yes, it did work. But taking it over the highs, taking along into resistance is not what I wanted to do. I was waiting to see, okay, could we fail at resistance, possibly start a backside move, and then get continuation of the trend, which is shown to be to the downside because of the weakness from the prior day. And that is exactly what happened. So now it was just about trying to be very precise with the entry. So letting this play out, had the push into 213, 213.50, got back below it. We're below the 9 EMA. We're below the VWAP. And even though this pre-market high got taken out, I still like to have it on my chart to use it as a level a little later in the day because sometimes there can be reactions there. So we broke VWAP. We had a push up into VWAP, and we formed a bear flag at it. And then we're back below pre-market high, so couldn't even hold pre-market high, showing a lot of weakness. And this is where I think things get interesting, right here. These two 2-minute candles. And then it's below pre-market high, below the VWAP, below the 9 EMA. So now it's below a lot of technical things, and it's at this prior day close. And it did something that I think is pretty great right at this prior day close. So it had a push up into it, and then it rejected it. So this rejection candle forming a mini bear flag pattern rejected that prior day close. I probably could have got a better entry, like immediately getting into this candle, but I just wanted to wait for that candle to close. And then when the next one opened and we started to show more weakness, I actually took it, breaking that prior pivot low, anticipating maybe a low of day break, also knowing that prior day low is below. So if this could really start going to the downside, I felt like I just wanted to hang on for the ride. So I ended up taking 5 of the 210 puts. I ended up getting in on this candle, got a little move in my favor. It did go against me a little bit, but the risk was going to be off this prior day close. No need to freak out unless it gets there. If it gets to that prior day close and gets over it, that was going to be my out. So risking less than $1. And this ended up playing out perfect. And really, it was just about following each 2-minute candle. So ended up getting in this candle. Next one opened, started to show a little bit of weakness. And then once we started to continue to trend lower and we broke this little prior pivot low and also, the low a day, I felt pretty good about this. And then we got a nice washout to the downside. And you can see the size of these candles start to get pretty wide range. And there's a lot of red candles in a row. So I don't want to hang on for too long. And then I was trying to hold out for that prior day low. And lucky enough, I ended up holding out for that. So then we got to this prior day low, and this was a really big, aggressive downside candle. And whenever those really big candles start to form and I see that it's kind of like a fast washout, I'm always going to consider taking profits into that because that's when those premiums spike. So we broke prior day low. We ended up getting down to 206, just below it, and then we started to reclaim it. And that was a very nice move. So that's where I took off the entire position. And here are all the entries and exits. So I did take a few other trades, TTD, small size. I did take 10 contracts, but they were only 86 cents a piece. So it was under $1,000 position. And then staying small on the big names like I normally do. Just trying some feelers, trying to get decent entries, go quick if they did not get out of the way. This NVIDIA, ended up getting out flat. Microsoft tried for a high, maybe a push over prior day high, just got out flat. And then I really waited for a solid setup. After taking a few trades, especially on a Friday, let's wait for something to set up pretty good. Let's give it a chance. If I can't get a lot going after that, then let's just call it a day, flat day. And this entry, 10-16-01 on this candle, this little bear flag breakdown, once it rejected prior day close, below pre-market high, below the VWAP and the 9 EMA, rode that thing down, held it for just over 11 minutes. A 10-minute plus trade for me feels like a long time, but it's set up and I was patient. I just waited, basically taking it from technical level to technical level, and it worked out great. And got rid of it at 10:27 and 12 seconds for $4.30 on the option. So I got over a $2 move on those options, which was about a 95% return, which is insane. That's obviously not normal, but the power of 0 DTE when I'm getting in at the right spot, there's some volatility, we actually have some movement, and those premiums can really spike. So that's a good example of that. And that was it. So when I can be net $1,000 plus on the day, I'm going to call it a day. There is no need to trade anymore, especially going into the weekend. So that was the trade recap. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.